Good evening. Hi, everybody. Yeah, very interesting trip. Met some interesting people, in particular, a gentleman who advised some of the richest families in the world and worked with some of the biggest private banking organizations. And he was kind enough to share some of his insights, which I shall do during the course of the next few weeks. But I wanted to start off with my regular piece about banking and HSB to close another 27 branches across the UK this year. What's particularly interesting is what they're doing and why they're doing it. They're closing the 27 banks, saying you can't ignore the changing way that people are dealing and doing their banking. Cuts will reduce the total of the UK outlets to 594 and involve some of the biggest and most well-known flagship branches throughout the UK, including Kensington High Street and Regent Street in London. However, spokesman said that the shake-up was announced weeks ago, which involves a cut of about 35,000 jobs worldwide. Massive changes in banking. Banking was always seen as a very secure place to go and work because your jobs were there until you wanted to retire. That's not the way at all it is now, and the banking staff are coming into the world that we've all shared for so many years. The Lloyds Banking Group said it would close another 56 branches this year, and whilst in November, TSB announced they plans to close down another 86 banks. So long-term changes in the way that banks are doing business is impacting on it, and as Roger alluded to a minute or two ago, the crypto is having quite a dramatic effect on the banks. So where are we now? Yes, in total they're only saying they're going to lose about 46 jobs at HSBC because they've redeployed people in London around their area. But we'll wait and see. Things change quite dramatically in the banking world. In the general economic world, we've got quite a number of changes that have happened. In particular, the market drop today as the FTSE 100 hit a 4-month low. Stocks marked off continues, the sell-off continues. Most of it's put down to the change and the impact that the virus from China's having. But in reality, what's happening is a large number of luxury goods suppliers are reducing in size and the share values are dropping. So we're seeing that impact. I did think that the comment that the American president made about if he doesn't get elected, the markets will lose in America. So what he's saying is the market staying good in the States is dependent on him. And just to show what's happened, during the course of the day, the stocks are dropping again. Since the luxury industry has dropped 40 billion losses in the US. So we're seeing a slide again. His threat of not being elected isn't really paying off. It's working quite the opposite way. One of the things I wanted to touch on was the standard within the banking world and the amount of fines that the banks have been hit. And strangely enough, the financial regulator has been fined or will be fined shortly because they've informed incorrectly people. They've shared confidential information of over 100,000 of their customers. So you're going to hear more about that coming in a short time. Tweets galore on Trump. Hong Kong seems to be in a shockingly bad trading data at the moment. It looks like they're going through a big fall. Again, a lot of this is put down to the coronavirus. But I heard a smashing piece. I told you I met a gentleman who worked for some of the richest families in the world, 2 of the Arab families in the world. He worked in China for 9 years. He worked in Europe as well and in America. And he was telling me that the bank borrowing currently is so low, it makes it very effective for businesses to borrow. One of the things that's been hidden for a wee while, last April, the amount, when a bank owns a gold, it can only show, until April last year, it could only show a 50% of the value of the gold on its books. Whereas when they have deposits, they can show the whole value of the deposits on their books. One of the issues are now that they can show the full value of gold on their books. And this is what's happening and forcing gold prices up, and the fact that not only China, Russia and the Arab countries are buying masses of gold, it's now the banks, including, and this is particularly interesting, he announced this news to me saying this is really the central banks and the central bank organizing groups that have announced this. So we're going to hear more of that when that becomes common knowledge. The borrowing state, particularly in America, is horrendous, and lots of banks are borrowing, as they normally do. You put your £100 or €100 in, your $100, and they'll lend that again, and they'll lend it again and again. So they're using the money time after time. The banks are in a bad way, and the banking generally, it hasn't got a long life, a long shelf life. And I do think that midway through the year, we should see some of the banks starting to show signs of problems. And nationally, that's nationally, and internationally, I think it could even be earlier, the way things are running. It's nice to have a problem that they can blame things on. Normally, it's a war, you know, but it's becoming impossible for them to finance wars, let alone go out there. And the virus is one excuse being used for the slump in the stock markets at this moment. Incredible thing to say. There's such a dreadful thing like the virus can be blamed on the stock market change instead of focusing on curing the virus. The other thing this gentleman mentioned to me, I did invite him on the call, but he's a bit shy. And he's shy in a number of ways, but he's extremely well connected. He introduced me to, in Paris, they have what are called family groups or family circles, and these are private investors. And these are private investors from all the world with management in Europe. And a friend of mine wanted to set up an operation, a nursing home operation, and he needed about 30 million just to get started and another 60 million in a couple of years. He made one phone call, and they had this investment group say, yes, please, we want to get involved. When can we meet up? So it's even the banks have been done with when it comes to borrowing. The other telltale thing he talked about was getting, in America now, the banks are so keen to learn, and they've taken on the debt of the world. The reason that the currency of gold and the precious metals like platinum and silver have been taken on by China in particular is that China doesn't want to be dependent on the US dollar and the value of the dollar. The dollar's decreased in value. I think it was 108 to the euro, and the euro's decreasing in value as well. But it's interesting that the Chinese have all set up a cryptocurrency based on their own currency. So here we see in a communist country, seeing the value of getting away from dependency on the US dollar. And there's a lot more of that going on around the world. So I think I've said enough, Roger, to upset a few people, but hopefully you'll take it as it's meant. Just beware. If you can shed any of your borrowing, do that. If you've got credit cards, pay those off as quickly as possible. Just get to a situation where you're not dependent on banks and bank costs and charges.